Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap. It is Tuesday, and today was definitely one of those whippy days where we probably explored each end of the range 3-4 times. And, I guess that type of day happens here and there. The easiest trade actually was we gapped down, and in my morning note I talked about I thought high beta tech was very oversold, that they tried to have a rally yesterday but didn't have enough time or enough juice that today they could probably go from red to green real early, or not even real early, just at some point, and then get a push. And literally within the first 15 minutes, Facebook was green, Google was green, Amazon was green, Netflix was green, Tesla was green, and Apple went green but was a little weaker. So that 20-minute plan could have been your entire day. And then, after a little bit, the market faded and looked as if everything was going to fail, and then ran to the highs, and then the news on APC came out, and oil was on lows, and we came right back into smack middle of the range to keep everyone guessing, can we push a little bit higher with Yellen tomorrow, or are we going to break, the lows? So let's just get to the chart. First things first, you look, remember I keep trying to show this double bottom to figure out if this is anything like the double bottom we have right now. Well, you have your red dog reversal low here on January 20th. You have a higher low, and then today we held higher again. So is this a potential double bottom? Potential, but to be honest, the landscape that I see all across the land with the banks and the oil, et cetera, it's kind of hard to believe. But if we were to take out this small pivot with today's high now at 1868-ish, there could be a trade to retest the 8-day, which is at 1884. But it feels like you're walking in front of a steamroller to collect quarters, whatever that terminology is. Can it go a little bit higher even? Maybe that would be up to halfway into the bar. But for tomorrow, if we happen to be flat, which I doubt will be flat because Yellen's from 8 to 8:30. I would say, futures are flat. If we could get a 30 to 60 minute, move above 1868 to 1873, chances are you could see a quick air pocket north to about 1884 where some real resistance comes in. If it pushes the envelope, you could see even closer to 1900, and then I would say, or, futures are off a little bit. Yellen didn't say anything the market wanted to hear. If we happen to trade below 1834, perhaps, look short for then a move below 1828 to then 1812. So that's how, I would be thinking tomorrow. So at least the range is getting tight, so we'll know if it expands to the upside or to the downside, and if you're playing for it to gap either which way, I'm not sure. I did say gun to head. I do think we see spiders 187 to 188 before we see below 183 again. We had that quick move. I thought we would get it today, and I was going to high-five everyone, but it didn't happen. We went to 186.94, and now you'll have to see what happens tomorrow with Yellen. But it feels like they tried to save the market twice, and things are oversold enough that maybe there could be more upside. But then there's broken areas everywhere. You go to the Qs, see what they look like. It too didn't have much traction, hit the high of the day in the first half an hour. It's still above yesterday's low. It did fill the gap, but still broken. But if it wants to test the 8-day and push up a little bit, there's that level right there. But again, it's broken and it hasn't been above the 8-day except for these 2 days, pretty much of all of 2016. The IBBs I don't think did much today. What they do, opened in the green, the red went to green, still below the 8-day. What did the Russell do? The Russell's hanging on by a thread to this prior pivot, which is right here, which is 95 with a small green below the 8-day. It hasn't been above the 21-day since breaking there. So many things are so broken, and as oversold as it feels, we're still off of the 7-year bull run, haven't pulled back that much. I know stocks have been battered and bruised, but the indices really haven't. As far as stocks, so what could you have done to start the day to make yourself some good money? All right, Facebook obviously gave you this red dog reversal up here and then got annihilated. So today you had your first green day where it opened red, traded above a prior low, and gave you a decent move off the open up until about 102. This is where I made my money. I bought it when it reclaimed this. I held it all the way up to about 101 and change, sold it on the VTF, and now I'm not so sure because you have this 2-day pivot, but you have a ton of resistance right here. I'd be very surprised if this can get reclaimed, if we could even get up there. If you want to look in the 5-minute chart to see how fast it was and how prepared you had to be, here it was. Okay, and this is awesome. If you're prepared for it, what's better than a move like this? Okay, where you have your first move lower below the prior low, reclaims it, fills the gap, goes sideways, and goes again. Right there, that was that whole entire move happened by 10:05, and then that was the high of the day. So this was your jam-packed, day trading prepared move that would love for something. If you catch something like this every day, you can make your career. You want to see what happened with Google? Probably did exactly the same thing. Google gap down, didn't even wait. Gap down here, put in its opening print. What's it called? Went above the prior, the high of that move, took out the close, and gave you a move up to 722. So you're talking about a 30-point move within a half an hour for those who want it to be in Google. And Google is the one that has been the strongest. Google is the one that actually, if you look at the daily chart, it didn't go below the prior low, and it's above the 200 days, so that's strong. Okay, Amazon has been semi-weaker, but it also went fast. We were talking on the radio at 9 o'clock how it's below the Bollinger Band and so oversold. And I know it took the most time yesterday, but you look at Amazon, and Amazon, not a great trade. If you look at it like this, look how didn't do much, pushed above the high, but if you were prepared in the first 20 minutes, look at the size of the move here. Here it is. Okay, here was your opening move below the prior low, or below the afternoon range. Took it over, then took out that 5-minute print, and boom, held in there, took out the afternoon high, and that was your quick move in Amazon. I think most traders probably made their day by 10:05, and then you probably got chopped up the rest of it. Here, you had a little bit of a bull flag. Was it going to continue to the upside? No. That's like most things. You think about what other stock I said today in the morning call. What else did Red Dog say? Oh, Netflix. Netflix also, if you look at the bar, I guess first of all, go back to the daily chart, this went green. So the two stocks that went green yesterday were Netflix and Google for high beta tech. So you thought maybe this could happen again. So it opened above the prior low, took out the high, and went to the 8-day. That was a nice move in Netflix. You go to the opening move, if you were prepared for it after it being so oversold, this first print, was a good one, and then boom, took out the afternoon high and went above. What was this? This was 84 to as high as 88. That's $4. So today you could have picked and chosen any one of those you wanted, and you got paid handsomely. Whereas if you did the same thing on Friday, though, thinking you could buy the first 10, 15 minutes without giving it a little bit of time, you got ran over. So they finally put the fear of God in everyone to do that, and then today it happened, and then the second or third moves weren't as easy. Which is what has been the characteristic of this market, is you have moves come out of nowhere, and then once you're like, okay, I want to buy the first pull-in, it goes lower and lower and lower and gets you out before it turns up. And then if like today, the market was really weak, midday, and then all of a sudden it rallied up, and then if you waited for it to have a decent rally and said, oh, I'm going to short this, it just took it further and further and further until you probably had a cover before it pulled back lower. And that's the way it's been. So that's why you have to be very careful with your tiering and your positioning. It's a good gold today. Did gold put a little topping tail in? It's a little overbought. Let's see, what did gold do today? All right, said it needed a down day, never got above the high, was green most of the day, closed red. Now you'll see if it fills this gap. That's maybe a clue that the market will continue tomorrow. What did the TLTs do? TLTs, where are you? Come on up. All right, let's see. All right, no data there. Let's see if I can go to, let's go to some of the banks. Goldman Sachs. Broken, Deutsche Bank. Let me tell you about my rule. This is a media rule that I have. If you hear about a certain correlation or a certain stock or a certain headline 6 times an hour, chances are it's ready for a reversal. And I've been talking to you guys about the weakness in the European banks for quite some time. And then finally today, I think all day long on TV, all you heard about is Deutsche Bank, Deutsche Bank, Deutsche Bank, Deutsche Bank problems, 2008 problems, Deutsche Bank, boom. Deutsche Bank went green, and that could have been it for Deutsche Bank, maybe. But So what does that tell me? Maybe our banks are ready for some kind of oversold bounce. You look at Goldman Sachs now, it's been battered and bruised, and I don't know, maybe it tries to take out today's high tomorrow and at least sees the 8-day, because it's done that a few times, and it's actually at the 21-day, which is up here. So if the market wanted to bounce a little bit, there you go. This was the last time it broke down, and this thing's been below the 200-day, for 190. So even if, Goldman Sachs goes by the rule too, you're below the 200-day, you do not sit in it, and that was approximately, 50 points ago. Jeez. Anyway, oil. The market kind of decoupled from oil a little bit today, right? Oil was on the lows. Market didn't fall apart. Market usually, if oil was down as much as it was down, it would, be off 200 points. It didn't. So I guess we'll see how that develops. USO is, the XLE, not the XLE, the oil itself closed below 30. And then if you look at the USO where it is a pebble throw away from the lows of the year. So I don't think it's going to be able to ignore that if that were to happen. But today, I guess, sorry, it's not sticking. In front of Yellen, it didn't really matter much. This broke here, below all the moving averages again. XLE was kind of weak after showing a little relative strength yesterday. APC came out and cut its dividend. We'll see how that reacts tomorrow after everyone has the night to digest it. It's still in this channel below the moving averages, above the prior low. So it's just same old, same old. Look how long after this move up it took to go sideways before, breaking down and making a new threshold low after it tightened up here. But again, below the 200-day, it's not an investment. It's just a trade or a potential hold. Look what happened to CVX. CVX, all of a sudden, everyone was talking about how it's the best next thing. You're ready to go lead the market, and then boom, a surprising inside day. Let's see what APC actually looks like after the move that it had. Didn't fall apart. We'll see what happens tomorrow. It'll tell you if it's priced in. So with all that said, an inside day with so much whippiness as far as inside yesterday. It felt as if the market was up a lot or down a lot, like so many different times. The best move was in the first 20 minutes in the high beta names that were so oversold. Some of them held on. Some of them, didn't do as well after that initial move when the shorts got squeezed. There is action, overnight, gun to head. I hate that whole gun to head concept, but people are saying, what do you think the next 2 to 3 points in the spiders are after the last 2 days of action? And I kind of think we see 187, 188 in the spiders before we see 183 to 181. But that's short-term tactical. Long-term intermediate, I don't think 181 or 1812 is the lows of the S&P, so there'll be lots of trades along the way. Have a great night.